Hey traders, real quick update here for our week of trading here to end April. This is April the 30th, 2021. It's a Friday. Wanted to go through our Monday, Wednesday, and Friday zero DTE, zero date expiration trades that we did on the SPX this week. And not to laud our success this week, but really I think to point out that even in challenging times with lower amounts of capital, we can get pretty darn good results. It ultimately comes down to execution. So I want to talk about the week that we had because it was a challenging week, and if you look at the market chart here in just a moment that I'm going to show you, you'll see that. But we had a pretty darn good success. All three of our days were fully profitable. Well, not fully profitable. All three of our days were profitable, but we did have an adjustment on one of those 3 days. But the interesting thing that I think I wanted to share with you, you can see that our gross profit was about $1,800. We had about $100 in fees in there, so about $1,700 profit for the week. None of us are going to go buy our own Lamborghini or fly on our private jet someplace on $1,700 of profit. But I don't think at any point in the trading week that I deployed more than maybe $6,000. In a lot of cases, I'm looking at a deployment of capital of $3,200 or $960. So $670 there for one position. So ROI-wise, it was great. And I just want to go through these trades right here again. We want to be fully transparent in what we do so you can just kind of note every single trade that we've done here. And I want to look at those on a chart. So you can see here going back to Monday. This would be Monday's trade, and there's a couple lessons here that I think I pulled out of Monday's trade. So we put in our trade on Monday at about 11:25 a.m., put about $4,200 into that trade, and you can see that we entered the call leg up here at 4,200. So I guess the lesson that I was looking at here on Monday's day was it doesn't really hurt us to wait a little bit. We're always so panicked to get our legs in and get theta working for us. We waited. Now this is mountain time for me here, so more than halfway into the day we waited to sort of get a confirmation of that weakness, and then we sold the calls up in here, one leg only. So I think that it's again discipline, but we always want to get that second leg in, that iron condor leg in on our zero DTEs. Because it's free money, right? We don't have to come up with any buying power, but it does add to the directional risk of the trade. So in this case, we had a really successful day, but we waited until more than halfway through the day to put it on to get a little bit of more clarity direction-wise, and we never ever got the put leg on. This weakness right here just kind of scared us into getting a put leg on. Obviously, in hindsight, we probably could have got one on, but still, very, very successful day there on Monday. Now, Wednesday was a little bit more activity here. You can see Wednesday's trading day right in here. And on Wednesday, we started out with about $960 of capital right in this range right here. And let's go back. We can look at the activity. Let's go look at the activity page here, and we can see those results. So this was Wednesday. We started off with a call leg, then we added some more calls to that, then we added the puts, then we added some more puts, then we added some protective legs in there. So if you look at the charts, you can see all of these additions here, starting with the call legs up in here, and then adding some additional call legs up in here, and then adding some put legs down in here. Pretty nice spread on that, but you can see that as we added these put legs here, that was because the market started really shooting up here. So we added a protective leg right in here. That's that one contract that you see. If we come back and look at this, we can see on the history tab here just one contract right there with these right in here. So started at about 1246 on that. We added one protective contract right there because the market was shooting up closer to our call leg, and then of course it reversed right back down. So we took that hedge right back off again. So we sold a couple different levels of calls, sold a put level down here, added a protective leg, took that protective leg off. You can see the activity here. Now this was FOMC day, this was the Fed day, and so we tried our best to avoid all of this. We waited to get started, you can see here, until 12 o'clock my time, which is when the FOMC minutes start getting released. And it really wasn't the release of the FOMC minutes. It was Powell, when he started to speak, that really pushed these around. So we had a little bit of activity there. We had to put a protective put position on. We had to take it right back off again. It wasn't too costly, but it did cost us some money. And yet again, we didn't really deploy too much capital on that day. About $4,100 total into that trade was what we put on that particular day. And then last but not least was today, Friday. And you can see again on our activity wise, let's come back to the activity tab, or the history tab rather. See if we can get that to pull up. Come on, you can do it. I know you can. We'll get there. Here we go. There's the history tab for today, April the 30th. Once again, market opens up 7:30 a.m. my time. So we waited quite a few hours into the trading day, and then we only got this put leg put on for the trading today. And you can see that it was right in here when we put that trade on, and the market kind of continued to sell off throughout the rest of the day. But we were, and I think at one point we were upside down maybe a little bit more than a 1-to-1 ratio. So I put up about $6,000 of capital. This was our biggest day this week, putting up $6,000 of capital into this trade, and brought in just about $1,000 of premium income on it, and was down about $1,000 at one point. So almost a 1-to-1 risk-reward ratio. But we continue to watch and monitor our advanced decline lines. We looked at the tick. We looked at all of the indicators that we look at. We felt good that we were going to kind of hold these levels, and we actually did hold these levels. You know, 4170 was down here where we sold this at. We ended up having that expire fully profitable for us on the day. So again, I guess the point that I want to make is that it was a trying week this week with 0 to expirations. Not one of our days, Monday, Wednesday, or Friday, was necessarily a smooth day, but we ramped down the amount of money that we were trading. And, you know, again, the most that we put in was today, the 30th, was $6,000. And over the week, we were able to adjust. We were able to wait throughout the day. We were able to only do a one-leg approach and bring in, like I said, almost $1,700 on the $6,000 day. So again, is it a little trying today with lower IV and some of this crazy movement that we get in the marketplace to do 0-date expiration trades? Absolutely, it definitely is. But we're still doing it successfully here as we adapt and try to be flexible in our trading. So if you guys want to check out our live trading room, we've got a free 1-week trial that you can check it out, come in, look at what we are looking at, see what we are seeing, see if it's beneficial to you or not. But as always, thank you guys so much for watching. If you find value in these videos, please go ahead and click the like button. We appreciate that, and make sure to subscribe and turn on your notifications so that you get notified when we have new posts. And if you leave a comment, I will always try to answer them back. So I'll drop a link in the comments below for a free 1-week trial if you're interested in our trading room. We do a lot more than just 0-day to expirations. In fact, our SPY trade for this week, if we look at that, I want to just look at that real quickly here. On our SPY trade, you can see that we had a little bit, and I won't go through every single one of these trades here, but we usually start the SPY trade on a Monday. It's a 1 week trade. We call it the 4 DTE because it has 4 days to expiration once we've put it on. And usually it doesn't require too much adjusting. This week's did, but we still brought in, what is that, about $170 or so after fees and commissions, and put up about $2,400 to do that trade. A lot of times these trades can be built out with the potential, no guarantees of course, but we can get the potential of these trades of 10% a week potential ROI. So not too shabby. So we had another successful week, guys. Hope your trading week went well. We'll talk to you soon.